All right, gang. So we are back with our stock of the week. So you know how we always talk about if you're going to put a stock in your portfolio, put it in for a good reason. Great dividend, great balance sheet, great product, service, whatever. Something that you can keep in your portfolio for a long time, something that'll make you money in all kinds of markets, right? Strong dividends, consistent dividends will protect you in any kind of market, right? And market's going up and your stock's doing well, you're getting price acceleration and you're getting a dividend, right? Market goes down, your stock's not doing as well with the market, kind of following the market, your dividends buy cheap, right? Very passive, very easy. All you have to do is sit there and wait. Uh, we're going to do a different kind of stock today. Now, this stock fits into all the other criterias, okay? Whereas the strong balance sheet, great product, just a fantastic track record. Um, but it doesn't pay a dividend. Just recently, they stopped paying a dividend, but there's a very good reason for that. So, look, guys, this is going to shock you coming from option traders and you know within this tech world, right? With all these SPACs and everything, right? Tesla's SPACs, GameStop, all this stuff. Something probably very boring, right? But look, there's a great opportunity here, guys, and I'll show you what it is. Besides a solid company that you can probably hold for years and years and years. So I bring you without further ado Cracker Barrel. Who'd have thought, huh? High-tech option traders giving you Cracker Barrel. Look, guys, anybody that's been to a Cracker Barrel knows it's not going to be five-star dining. It's very consistent. It's very home style. It's very comforting, right? But they also have a fantastic online store. They have products that are bought worldwide, the brand. Everybody loves the brand, right? You see their products all around. How many companies do you see in retail, especially food, that are dying to get on a shelf in Costco, dying to get on a shelf here or there? Cracker Barrel's everywhere. Plus, they have a fantastic online presence. And the reason that they've stopped doing the dividend after this most recent dividend coming up September, I believe. Um, the reason is they're not going to do buybacks for a while. They're not going to do the dividend for a while. They are going to focus on the company. All the money they make, they want to put into the company. Maybe a little reinvention, maybe a little expansion, maybe a little up-to-date infrastructure and stuff. And that makes sense because think about it, guys, right now, coming off the COVID experience and all this stuff, you know, it's a great time for a business to invest in itself. As a shareholder, you love to get those dividends. You love it when this company buys back stocks, right? It makes your stock go up. And it's nice to know that you put your money in the company and the company is willing to put its money in itself, bet on itself. That's always a good thing, right? But you just in the same vein, train of thought would like to know that this company is thinking about the future, understands what's important. It's a great opportunity, right? When you think about it in the restaurant industry for a company that's established product, established name, established infrastructure, including an incredibly strong online presence with their store. That's It's an incredible opportunity for them to take advantage of this economic growth that's coming and expand their market, right? There's a lot of market space open right now. Restaurants that close that won't come back, restaurants that will reopen but just won't be the same restaurant, right? It's going to be a different face out there besides your McDonald's and stuff that were allowed to stay open during the COVID. A lot of these smaller restaurants, especially dine-in, right? Dine-in was the death knell for restaurants, right? If you were dine-in like Cracker Barrel, you had to either quickly adapt to this curbside service or whatever, maybe DoorDash or something like that. But for the most part, you're dead in the water. You got to put people in those seats. The most expensive thing in a restaurant is an empty chair. Everybody knows that. So they've decided to put their money right into their company and maybe take advantage of the landscape. And that's great. But I want to show you guys, let's talk about the chart and stuff, okay? First of all, let's go take a look at their online presence, okay, guys? I'm going to share my screen with you here. Let's start with the online presence. This is their page with the store, and you can see, look at all the products they got, and they do really well. I mean, they do crazy well. Everybody loves Cracker Barrel, you know what I mean? Everybody likes to make jokes about Cracker Barrel, but everybody loves Cracker Barrel too. Kind of like IHOP, right? I mean, you know, people either love it or hate it. But you go there, right? And you go there with the family. You go there for the that home style environment and home style menu, and then maybe you pick up some gifts and send them over to people that can't go to Cracker Barrel. Like in Hawaii, we don't have a Cracker Barrel. You got to go to Costco. But you see this online presence. But let me show you. Remember, guys, I always tell you guys with stocks, you want to have those strong dividends, right? Because you want those to protect you in bad moments and stuff like that. You want it to be buying cheap and all this stuff. But there's a little trade-off on this one, and it's something I've taught all our members. Weaponizing covered calls, but you have to have the right kind of stock to weaponize these. Let's go look at a Cracker Barrel chart. Let me move that handsome guy there. Move him to the top. That's where he belongs. Anyways, guys, look at this chart. This is a 5-year chart, 5-year chart. Look at that price stability. That is a covered call writer's dream. I've taught all our members how to weaponize covered calls, create constant income. This is a perfect stock for that. So what you give up in the dividends through a little effort, one click in and let it expire worthless, you can make those dividends up through the covered calls, and you make it in cash, right? So you can use it on something else, or you can buy some more Cracker Barrel, who knows? But it's a great stock, and it's, you see how it recovered through the COVID. It probably has more room to run. It's had good earnings. You see how the earnings went before the COVID. They were making 258, then they were just getting hammered. Got a little bit better there after that. Was that false reopening. Then we had a little look at that, exploded to 718. And now it's kind of toned down, right? But everything's opening up. Cracker Barrel, people love Cracker Barrel. So I know, guys, I know, I absolutely know that this is not generally your cup of tea. But look, a little variety, little diversity in your portfolio with those growth stocks. It's okay to have one or two of like this. I've got a couple in my portfolio that I keep in the portfolio because maybe I haven't gotten big price acceleration. Maybe I haven't got big dividend contribution, but it's been very consistent in its price. Like Huntington Bank's one of those, very consistent in its price. So I could constantly write these covered calls and weaponize them and create some income, maybe every 2 weeks, every 4 weeks. If it's on something with a lot of options, you can do it weekly. You know what I mean? We've done it with Apple when Apple hits these sideways moments. Sideways movement is a covered call writer's dream, especially if you weaponize them the way we do. Now, if you want to learn how to weaponize them, you got to sign up for the program. But look, guys, take a serious look at Cracker Barrel. It's a worthy addition. I know it's $174.50 right now is the price, but you know what I mean? If you're going to beef up your portfolio, put some real beef in it. The good thing about this is it's got this sanitized, it's kind of sanitized from this rates, the inflation and all that, right? It's food service. So of course, inflation, the cost of food goes up, the cost of dishes go up, right? But it's pretty much insulated from a lot of this madness. And you'll find too that, you know, you see the NASDAQ, right? It's really, really sideways right now. Big bumps up, big bumps down. We talk about it in the morning reports. Look at how this stock has traded over the last 2 months. It's just traded really well. It's been a nice up climb, but it's a good idea. So take it into consideration. Now, this one too, you can buy, I believe on Schwab, if you want to buy partial shares to start a position, you can do that via the slice opportunities, Robinhood. You can buy partial shares and stuff like that. I believe Cracker Barrel is one of them. But look, take a look at Cracker Barrel. It's boring. It's been around for ages. People don't even think about it when they think about stocks, but it's a really great opportunity. You put 100 shares in your portfolio and you just weaponize that thing with the covered calls. you know. But other than that, guys, look, we'll be back next week with another stock of the week. But seriously, take a look at Cracker Barrel. Very boring and very, very good for those people that don't want all the volatility. All right, gang. Thank you so much. As usual, we'll be back tomorrow morning with our Friday morning report, roll into the weekend. Just for you guys market watchers, the comp is down, the Nasdaq's down about 200 still. Interesting morning this morning. We'll go over that in the report tomorrow. But go take a look at Cracker Barrel. See, I'm standing in front of them. Okay, I'm not. I'm in Kalihi. We don't have one in Hawaii. That might be where they're going to move that dividend money. Expand to the West Coast, expand to Hawaii. You never know. Anyways, guys, especially over the next few months, think about this. Especially over the next few months, with the economy reopening, right? With things starting to pick up on the, if things start picking up on the labor market and spending, these are the kind of things you want to have in your portfolio. These are the things that it's very easy for them to quickly capitalize on growth, right? Startups or restaurants that have gotten beat up real bad aren't going to give you that bang for your buck. So, even at $174, there was a time when Tesla was $170, right? Okay. All right, guys. We'll see you for tomorrow's Friday morning effort or Friday morning update. It's been a long morning already, man. All right, guys. I'll see you guys for the morning update tomorrow. Go take a look at Cracker Barrel. Don't forget about the old stock of the weeks, too. That ET is just hanging around that $8 price range. You want an under $10 stock and get in the energy play. That's a great one. That one has a great dividend. We just did Apple. Apple's in a very good buy range right now between that 120, 123 range. That's a great dividend stock with probably the best balance sheet on the planet. We've also did CCI, which is Crown, which is your 5G towers, if you want to get into some of that. Another one, solid balance sheet, solid dividends, solid business model going forward. So take a look at these guys and add Cracker Barrel to your little watch list and just go take a look at it, even if you don't buy it. All right, guys. I'll see you guys for the Friday update in the morning.